Welcome to our complimentary Friday morning or afternoon, depending on where you are, sessions. Dan and I are in California, so we wake up a little earlier than most because we have our finger on the pulse of what's going on, right when the market opens. So we just want to welcome you to this super safe place to get a little smarter and to open your understanding to strategies that you're not aware of right now, and to also invite you to reach out to us. We show people how to find the opportunity in the uncertainty. And Dan, I woke up today feeling super uncertain. Definitely I wanted to find my grounding in this place of strategy and support. But it was a little off-putting for me today. When I woke up, I saw something that was a little shocking in the newspaper. Somebody that I know actually passed from what's going on here. It was an article in the New York Post. So it's the first person that I know that is getting physically affected by all of this. It's kind of
always tough to see it's home, right?
Yeah.
We're quarantined in our building here because there's cases in the building I live in. So I'm not leaving my shoebox.
Yeah. So let's just all be safe and be here for each other and share positivity and opportunity. And that's what you and I are all about. So we're recording to the cloud. You see my presentation here. Yes.
Yep. Sharon.
So just really high level opportunity and uncertainty. I was sharing my mug. The saying on my mug that I have here is it's kind of exciting not knowing what's coming next. I don't know if the word for today is exciting. I believe it's kind of challenging not knowing what's next. And instead of crawling under a rock or putting our head in the sand, we're calling out to people who we know, people who we care about, and calling out for you to look challenge right in the eye and to find the silver lining, to find the opportunity in all of this. So limit our losses. We want to protect and grow in a time when most people are struggling financially. As always, we want to start off and make everybody aware of the fact that we are not financial advisors. We are not licensed to guide others in how they invest and trade. What Dan and I are doing is sharing what we've learned in investments and trades that we're taking on. So you could watch us, or you can open up a paper account. And that's one of the things that I highly recommend if you're somebody who's not currently comfortable or confident around trading and investing on your own. Open up a paper account and just do some simulated trades, with some monopoly money. Best way, right, Dan?
Yeah, you want to learn all the mechanics of the platform before moving on to live money for sure. Options gains can be complicated. You don't want to click the wrong thing, right? So make the mistakes on the play money, right? That's always going to be our message.
Yes, and there's no better time to learn than right now because the markets are moving, and movement is money, and movement is power, as I said in my email. So if you want to feel more empowered during these uncertain times, learn something new and take action. This is a slide from last week, but I believe that this quote is as relevant as it was last week. Let's take what this market is giving us, right? And let's be strategic in the way we take profits. Let's get in and out, be an assassin, hit and run. There's no worst feeling in the world of, oh, I'm just waiting for this to come back, or I'm sitting on my hands right now because, as in all other times, it's come back. Things change. We can depend on that. We don't have anything in history that we can refer back to that's going to guide us right now in how we make decisions. So I think what is guiding us in how we make decisions right now is looking at real time as opposed to going back in history. How do you feel about that, Dan, when I say that? I think that's how you and I are acting and taking these strategies on with that.
Yeah, absolutely. We're going to have, short-term, medium-term, and long-term strategies, all based around what is happening in the current market, right? I apologize if there's a dog barking in the background. I'm working from home, as we all are, and my wife's office is inside, so I'm on the patio. But
and I'm in my home office, but I have this great green screen behind me and Zoom. So just moving forward, one of the things I have my clients doing right now, and I work with self-directed adults. I'm also teaching investing to high school students. Do you know by 2030, it's going to be a requirement for high school seniors to have at least one semester of personal finance before they go to college. So I am working with young people to get comfortable with Thinkorswim, TD Ameritrade, opening up a paper account. And if you're on this call and you want a link to opening that up, just email either myself or Dan, Dawn at Options for Wealth, Dan at Options for Wealth. And what they're doing is creating their shopping lists. And the shopping list, and maybe Dan, you can help me on your side with bringing up Weight Watchers.
And that goes, that goes into Nancy's question also. What do I invest in and what do I sell off? Like, well, if I had a crystal ball, I'd tell you. But what we can do is set ourselves up to two things. One, decide where we want to buy a stock that's on sale. This came up in our Monday session. There was a nice lady in the session who said, I want to buy Weight Watchers, right? I want to get into this. And she had, a whole litany of reasons why, good CEO, a lot of the fundamentals looked good on it, so on and so forth. And
also people are at home complaining on Facebook that they're gaining weight because of all of this.
Yeah, exactly. Everybody's going to put on the quarantine 15. So, you figure Weight Watchers probably going to boom once this thing passes, was her mindset. So the idea is, let's get paid a premium to buy Weight Watchers on sale where we want to buy it anyway. Okay, I'm going to repeat that. Let's get paid a premium, little bonus, to buy Weight Watchers on sale where we want to buy it anyway. In her case, I can just quickly pop up a screen
let's
share.
show the chart.
You want to pop up? Yeah, you want to pop up? I'll pop it up.
Pop up, yeah.
The dog finally stopped barking, so that's good.
So let's bring up
that. This is the other thing I'm going to show you today, but Weight Watchers.
WW.
Okay. So in the class, we identified, Weight Watch. This is a 4-hour chart, so this goes back 180 days. Dividend paying stock. Topped out at about 47 very recently, right? This is at the beginning of the year. Weight Watchers at 47. Fell all the way down to 9.75. Like, wow, like what a drop, right? Now we're hovering around 15. So the play was, why don't I say, I'll buy it at 15, or even more, I'll buy it at 12 and a half. Can you guys hear me okay? I'm getting a message on my screen. Yep. I'll buy it at 12 and a half. If it doesn't get to 12 and a half, I'll just keep a premium. And if it does get to 12 and a half, I'll buy it. And we do that by selling puts at 12 and a half. And we walk through all the mechanics of that in class, right? I'm not going to just say, hey, sell puts at 12 and a half. There's a lot of other insurances we have to put in place to make sure that, in case the wheels do fall off Weight Watchers for some reason, and it tanks down to like 2, that we're not killed by that. But the idea being, I think their name was Lauren, right? Came to class. Said, hey, I really like Weight Watchers. What's the best way to get into that? How do I get into this? Like, I want to go, I want to go long Weight Watchers. Like, what's an effective way to do that using options? And so we, diverged from our lesson and covered it. And there's absolutely ways to do that with many stocks. But in this case, it was a bull put spread. If you want to look that up, it was a sell 250, buy 210, bull put spread. for, I think it was May we chose. But we're going to walk through all that in detail. Not going to get too into that today, but that's what we did on Monday.
Yeah. So what we're explaining here, oh, by the way, look at my nails.
Yeah.
No nail salons open.
Yeah.
So.
What are you going to do?
So what we're teaching people on Mondays in our group is how to get smart around creating more of a rate of return and protecting your portfolio through options. And most people don't understand what options are. Most people, have heard stories of people, blowing up their accounts with options. There's nothing more safer than options if you understand how to put on these trades, because everything you're doing is hedged. So, if you didn't understand options, what you would do in that situation is set up an alert for yourself, right? So when Weight Watchers got down to the point where you'd be willing to buy it, then you can go take action. So getting yourself familiarized with the charts is super, super key, and understanding, what was the high, what was the low. There are other aspects we want to look at as well, and I bring them up here in the slide, right? We want to understand what's the strength of the company. So I'll look at fundamentals, yet fundamentals are not running, the show these days, right? It's current events. Fundamentals like earnings per share, has that grown year over year? Has the revenue grown year over year? Why now? So Weight Watchers, Clorox, you can do some research around these companies who are seeing a boom in their earnings right now because of what's happening in this pandemic environment. And as Dan said, we will show you a process not only for getting those shares into your account at a level that you want to buy it at and be paid to wait, but once the underlying is within your portfolio, there is a strategy to turn up the rate of return through selling calls. So this is called a covered call strategy, and that's something that we show our students. But wanted to at least get you thinking about your shopping list. So in chat, if anybody has any ideas around some companies that you think will do well. I got an email this week, Dan, that I shared. Peloton, the indoor bicycle, the gyms are closed. There are people who are addicted to SoulCycle. Every house in the Hamptons perhaps is ordering, a Peloton bicycle right now because they want to work out. They don't want to put on the 15 that you just described, right? Last week, I spoke about a strategy that I'm following in my portfolio, so I'm not going to go into this in great detail. The strategy is identifying four positions, one being the triple bond ETF to hedge, right? To hedge a NASDAQ group of stocks, because bonds are non-correlated to equities for the most part, right? And just wanted to share, this is what I shared last week, which was the positions I put on the 16th of March. And I'm really happy to share that I got out of these positions on Monday. And through this strategy, instead of buying the underlying, I could have bought the underlying, but instead of buying the underlying, I employed a covered call, not a covered call, a bull call spreads. And I increased that particular segment of my portfolio by $6,180. I made 24.5% in 2 weeks. That's pretty significant in a market where the ground is rocky, we're shaking. So I show this so you can understand that there are real people making progress by opening up their minds to new ways of being in their portfolio. And I was that person before I started learning all of this with Dan, who depended on a financial advisor, who paid other people to lose my money for me. And stop the madness, And I believe now while we're at home there's had been no better time to get smart around all of this, because things will never be the same. This is, I believe, a transformational moment in the world on so many levels. So that's my spiel. We have a few other people that have joined us. Welcome. As we were saying earlier, please chat it up. Go down below in the chat box and set your panel, set the to all panelists and attendees, so you can give everybody a sense of what your questions are, what you'd like for us to clarify. But I do believe the biggest question that is out there is, what should I be invested in? What should I sell off, right? I believe that we should never be holding anything in our portfolios that we do not love and believe in at any time. That's my personal opinion. And you can always make money. Many people think, I'm going to lose because the markets are going down or the markets are volatile. That's completely untrue. When you align yourself with specialized knowledge around how the financial markets work, and you learn new strategies. So I just want to acknowledge everybody who joined us here today, because you've taken the first step. Now I'm going to hand it over to my colleague, Dan, to open up your mind to something super exciting.
So we do, thank you, Dawn. So we do some more active option strategies also. So my forte is more the 2 to 3 week options positions. Now, the idea is that in a balanced portfolio, you take the vast majority of your portfolio, and you do, puts to acquire, calls once you have the stock, kind of just a, alpha generator over the market, but a much more longer term outlook. Like as Don was saying, choose stocks that you like, good fundamentals, so on and so forth, but use options around those. And the purpose is twofold. One is you're going to get an extra couple percent when you buy, and you're going to get an extra couple percent when you sell. Right? Now that doesn't sound like a ton, but add on above that, once you're holding a stock, to rent out that position. Think about if you own a house, if you own a rental property, well, you can rent out your stock positions also and rate a little extra every month.
Dan, just put your microphone near your mouth, like try to hold it there.
Sorry.
That will help.
I know. I don't know why I couldn't call in today. It didn't let me call into my phone.
Really
Usually I have
great
my
right
AirPods.
now.
All right, cool.
Yeah.
So the idea is, once you have those equity positions in your portfolio, to sell calls against them out of the money at a point where you would be happy to sell the stock anyway. For example, in our Weight Watchers example, okay, if we ended up buying Weight Watchers at 15, right, we were assigned at 15, what percent of return am I happy with on that? I'd probably be happy if it went to 20, right? If I bought at 15, sell at 20, that's a win. So I'll sell calls at 20. And if I get called away, fine. I made my 33%. Also made the bonus on what I got for the call. Get back into Weight Watchers at 15. Sell some more puts back at 15. And if it comes back down, then we get back into it. So that's one side of what we do. The other side is the fun stuff that I love. So let me get into that. This is, and just quickly, my background. I ran a hedge fund here in California for 2.5 years with a mentor. I did portfolio management in Toronto. Grew up in Toronto. I'm Canadian, but I managed to finagle my way down to the, in my opinion, beautiful, arguably the nicest place in the U.S. But that's just my take on it. And now I live here with my wife. I do this. I worked for Fidelity for a little while, and now I'm just doing this full time here. But let's look at, you know what? Let me just bring up the slide deck I built for you guys. How about that? Keep it simple. Today we're going to talk about butterflies. Can you see that?
Yeah, I see the butterfly. Yeah. Mm-hmm. Yeah, just hit like slideshow. Yeah. Cool.
All right, that's all loaded up. You can see that.
Yes. Mm-hmm.
So two things that I trade predominantly the S&P 500 and the VIX. Now, last week we spoke a lot in detail about what the VIX is. I'll hit it again quickly, but understand that for the purposes of today, the butterflies I'm going to be addressing are on the SPX, which is the
Index.
The S&P 500
The
ETF.
index, not the
index.
ETF. It's
the index of the ETF.
Right.
Yeah, exactly.
So one of the things I want to talk about the VIX, my mother, who's 84, texted me this week, and I sent Dan the text. And this is what she said to me. What is the VIX? What is the VIX? My phone is telling me, when she says her phone is telling me, that means, she's getting these news articles. My phone is telling me that once the VIX comes down, we will get a market bottom. My mother said this to me. So the VIX is something that's in the news right now. And I want you to give everybody a perspective so they really understand what it is and what they're looking at. Yeah.
I mean, when Dawn told me that yesterday, it kind of just went, wait a minute, because that's actually the exact opposite of how the VIX works. For the market to bottom, the VIX will spike again, and then the market will bottom. As the VIX goes down, typically the market is going up. But it's funny, right? All the news that's out there, and it's complicated, right? But the VIX essentially is the skew of puts and calls sold against the SPY. So what does that mean? When the demand for puts and calls is higher, you actually have a slide on this. Same legal statement. I'm not recommending trades. I'm going to show you trades that I actually took super quick. The VIX is essentially a 30-day volatility index. Okay, so it's like how scared are investors in the market. A high VIX means that investors see significant risk that the market will move sharply up or down. Let me repeat that. A high VIX means that investors see significant risk of the market moving sharply. Okay. If we have current price sitting at, I think the SPY is at, I think 250 or so right now. If you want to profit as that goes up, you would buy calls above the current market out of the money. If you want to profit as that goes down, you would buy puts below the current price. If a lot of people are buying calls and a lot of people are buying puts, that means a lot of people think that the market is going to move. Hence, the VIX increases.
So movement is volatility. And the way we can gauge that movement is by looking at what's happening, which is the purchasing of puts and calls. And that's how that index, that's how that measurement is determined.
Mm-hmm. And specifically, one little nugget I have for you guys that's worth noting is that the call put skew is higher than it's ever been right now. That means that investors are piling in on the call side.
Okay, so what is that telling us? Meaning
that people think generally that the market is going to go up from where it is right now. Does that mean it's going to go up? No, of course not. Of course not. But the investor sentiment is that it's going up from here. Take that for what it is. That is largely why I put on this play the other week. I'm gonna skip the play, Dawn, because I hit it last week already. But sure. Let's talk about.
There are all these recordings, by the way, are in our YouTube channel, and
these are recorded.
Send everybody the link to the playlist. But yeah, put the microphone near you.
Yeah, sorry. We hit the VIX like in a lot of detail last week and the week before, so I don't want to spend too much time on it. But this is a butterfly. Okay, a butterfly is a spread in options trading. Okay, essentially how it would work is, and in this case, this is a call butterfly, not that it makes a difference, but you have 3 legs on the butterfly, and you are essentially selling your middle point and buying your outside leg. So, let's look at this on a real market, because examples are all well and good, but you like the real stuff. So VIX butterfly, okay? So again, I did a butterfly on the volatility index, the VIX, when we were sitting up here at 83. The way the VIX behaves is it can't stay elevated that high for very long without the market absolutely falling apart. Okay. Remember when we were going down 10% a day, up 10%, down 15%, up 12%, like that's when the VIX was at 83%, right?
It's at 55.33 right now. It's up today, 2 points. It's up today.
Yeah. So currently it's at 55. When you sell, when you buy like the options on the VIX, it actually prices on the future month. So this one is pricing off of 49.7. I'll get into some detail on that, but yes, the current VIX is at like 50 something, right?
Mm-hmm.
But ideally, like, and the reason why we put this on was, we thought that the markets have to relax at least a little bit. And sure enough, they did. And the VIX fell down right into our little profitability zone. If you guys need help understanding what this graph is expressing on the y-axis, we have our profitability. So break even, up 5,000, up 10,000, minus 5,000, minus 10,000, right? And along the x-axis, we have the VIX. Like, what's the VIX currently at in terms of the future month? Now, Thinkorswim is telling me the future month is currently at 49.65, which is almost directly at the maximum profitability zone. This play is currently up about $3,100. Yeah, in about 2.5 weeks. But here's the kicker. This only cost me $3,100 to put on. Like, so I'm laughing right now. This is a nice little play. Again, not going to be able to teach you guys everything about the VIX in a quick call here, but I wanted to just show you briefly.
You're showing us what's possible. And I was with you, when we were putting this on. And
we published this.
So if this is something you want to learn, we're here today doing an educational session, but for free. We have people who we're holding their hands. We're showing them how to use the tool that you just saw. We have, a video platform that has world-class teaching around learning, options during the free time that you have between meeting with us. And then when you meet with us, we trade together and we put those positions on in your paper account. So there's the best way to get started with something is to get started, right?
Exactly. And, we walk through the management of the trade also. I a lot of times, so I've been trading options for about 10 years now. I've had been very blessed with the mentors that I've had in my life that have taught me how to do this, really held my hand. I actually launched the hedge fund with one of them, later sold it to him. But we'll walk you through it. Like, it'd be very difficult to just figure this out on your own. I did not figure this out on my own, okay? I'll tell you right now. But in my mind, the hardest part about options trading is not looking up what is a butterfly, what is an iron condor, and then putting it on. The hardest part is knowing how to manage it once it's on. And we walk you through that too. So this, in this example, right, the play I just showed you, there's $310 per contract, 310. I bought 10 of them. It's a debit spread. I'm buying them. We tell you the target exit date. We tell you the target return. Now, we blew the target return out of the water. We were originally targeting 30% for this play. But, we're going to ride our winners. We're going to ride our winners, and we're going to cut our losers early. And that's the name of the game here. I exited 5 contracts today at 6:15. So those 5 contracts returned me 98.4% on those 5. I'm holding the remaining 5 contracts till Friday, where I will attempt to exit for a little bit higher than that. Why am I holding till Friday? So this play here is up 33.96 right now. So it's up a little bit more since we started the call. If I wait till Friday, my curve gets a lot bigger. So I'm holding out for an extra $1,000. Really, at the end of the day, that's effectively what I'm doing. And, that's because it's in the perfect spot, right? If I was sitting kind of in a lower profitability zone on my curve, I would probably have exited the whole thing today. So you need somebody to hold your hand through that, right? Like, it's not just intuitive on how to do that.
And what's great about what we do is we have opportunities not only for you to work with us in a group, you could work one-on-one with Dan, and even have all access where you have a question and you text Dan you know, he has a program for working with people like that. And that's what I did 2 years ago. And I feel like, Dan, I prepared myself 2 years ago for what we're seeing now, because the earlier version of who I am, the earlier version of me would have gone to who I was in 2008, scared, a victim, and not knowing which end is up. I knew the second that this was hit, what my strategy was, and you know, how to protect and grow my money because of all the work that we did together. There's never been a better time to get smart around all of this. And after you get through this, you're going to be such an amazing investor and trader in whatever market this morphs into, right?
Yeah, and you know that too, Dawn, is when you see these swings, what we're really seeing is a very large transfer of wealth, right? The trading is a zero-sum game. Let me repeat that. Trading is a zero-sum game. Every trade, there's a winner and a loser. Period. Yeah. There's a buyer and a seller, and somebody's right and somebody's wrong.
So your friends, you may see your portfolio going down. People are expressing, you know, their fear around, are they going to be able to retire? What is the next 5 or 10 years going to look like for me? On the other side of their sentiment are the people that they sold low to, right? Are the people who understand what it is that we're showing all of you. And knowledge is power. Information is the most valuable asset that you can create, that you can acquire. And that's why we're on this call with you. That's why we're doing these free sessions, to really encourage you to be on the side of who's profiting right now. Because people couldn't be losing if other people weren't profiting. Zero sum.
Exactly. And we go through all of this in detail. These are, you know, you've heard about the Greeks when it comes to options trading. These are the three most prevalent ones for a butterfly that we talk about. You know, we have Delta, Theta, and Vega. Again, I'll send you this. I'm not going to go into a ton of detail on this, but the idea is, and I'm going to show you the SPX butterfly play that we put on last Thursday, Dawn, I think.
Yes.
And, you know, now here's a play where price didn't move, right? So there's no delta since we put it on. Theta was minimal, right? But the play is up like 14% in a couple days because of how we addressed our Vega, our volatility, right? Butterflies are fantastic in a falling volatility environment. So when volatility was at 65, well, the VIX is at 65. This is not like the implied volatility of the option, right? But we're using it just as a reference point, okay? So volatility is at 65 and it fell to 55 or 54. This is actually where our profits are coming from on this play. This is the play right here.
Not the time that's passing, and it's not the movement in price.
Yeah. Not the time, price didn't move, nothing happened except for people got a little bit less scared. Isn't that amazing? Like nothing happened from the time we put this play on till now. And we're up $3,900. Like that's unbelievable to me, right?
So when you say margin required, just so people understand what that means.
Yeah, sure.
It's not your risk. It's not your risk.
Yeah, so I'm going to just go through this really quickly. And I don't usually I blank these out, but here you guys have the exact, you guys have the exact strikes. You know, this play is kind of, in my opinion, it's probably too late to put it on anyway, but you know, if you want to monitor
we're not suggesting that you put this play on.
Yeah, so.
It's something we did previously.
Okay, what is portfolio margin? Portfolio margin is your, the amount that your broker will require you have in your account to put a play on, an option spread on. Now, can I lose $27,000 on this play? Sure, if I just go to sleep for 3 months and don't keep an eye on it. That's possible. If for some reason I go to sleep and the markets rise from 2,500 to, I think it has to get like all the way to like basically back to all-time highs by April 20th in this case, yeah, I could lose all of this. What do you think the chances of us getting back to 3,300 in the next 3 weeks are?
0.
Pretty low. And you know what? If you see the shape of this curve, we are actually delta positive. So how we would effectively manage that, if price moved up, we're at 2504 right now, up, and okay, we're at 2700 now. That's actually fine. We'd probably be up. I mean, I can pull the actual graph up. You know, we would be laughing if that was the case. We get up to 2500. Hey, we're up $8,000. Probably just pull the plug on that play at that point. Take the $8,000. What if price goes down? Okay, so price would have to go below 2400 to be our break even, and it would have to go, you know, way the heck down here, 2300, before we're losing anything that we really care about. But the idea is that we've limited our downside risk. Isn't this great? Effectively, in my mind, we're risking $2,700 on this play to the downside. No matter how far down we go, that's the max we can lose on this, 2,700. But the upside is substantial. Currently up about 3,000, you know. Realistic gains on this trade are about $8,000. And again, you don't have to do 10 contracts. You can do one. Or you can do 100, right? It's whatever your account, right? Whatever your account will bear.
Right. So I did.
And rule of thumb is you don't want to, yeah, like rule of thumb is you don't want to risk more than 2% of your account on an options play like this. Rule of thumb. Food for thought.
So I know,
But,
you know, for some of you here, this may be, you know, above perhaps what you're understanding, but we show you this so we can pique your interest in getting smarter around how the financial markets work, to increase your financial literacy, to believe that there is opportunity in the uncertainty. So we're demonstrating to you opportunity that we've seen in the uncertainty. So, you know, we have a lot of people who watch this recording, and we're going to, you know, we have a playlist that will make sure that all of you have access to, that is on YouTube, Dawn, D-A-W-N, at Options for Wealth. That's Options, F-O-R, wealth.com. Dan, D-A-N, at Options for Wealth. And we want to be your mentors, your guides. Dan is the brainiac that's been doing this for a while. I'm here to show you that you can be somebody at the level that you're all at right now, and in record time. And when I say record time, I mean, you're not at work now. You're in an environment where you can take on something to learn. And instead of maybe learning how to play the ukulele, although that's kind of cute, my husband wants to learn how to play the ukulele. You can learn a life skill that will serve you forever. And what I love about understanding the markets, Dan, is you can do this from anywhere, from any room in your home, standing up, in bed, you know, wherever, you know, life takes you, you have an opportunity to get smarter around this, and also to keep yourself afloat, so you have the resources that you need to move through any, you know, situation that we face in life. So what I'm going to do is stop the recording right now. So thank you for joining.